Hi traders, good morning. Welcome to this FXDD video on the euro dollar and pound dollar. My name is Chris from Elite Currency. And before we take a look at these two currency pairs, please be aware of this risk disclaimer explaining the fact that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And this webinar and this video actually is for informational and educational purposes only. If you are interested in joining webinars, please take a look at these two links. Top link is for live trading webinars and bottom link for live educational webinars. Always a couple per week are being offered from Nennet and myself, and of course the FXDD YouTube channel. You can find out all of the videos and the recorded webinars as well. So if you subscribe there, you won't miss a thing. All right, traders. So this is the euro dollar, and in my view, a very strong upside is probably going to be a wave A correction, maybe even a wave 1. But more importantly, now I think it's time for a bearish correction. There was already a bounce at 112.50. That was logical because of the round psychological level and the fact that price already had extended 250 pips up. So some retracement time was logical, and there was indeed a bearish candlestick pattern at the weekly R2 point. On a lower time frame on the weekly chart, we already saw momentum here kick in, 3 out of 4 candles with bearish candle closes near the low, followed by a bear flag, a break of the flag for downside. That looks like an ABC of a bigger correction, maybe wave A. This upside was corrective and running out of steam, making a rising wedge pattern like this, looking typically like a wave B. So for the moment, A, B, and down, I think for the moment for C. That's what I'm expecting at this moment. So far, all of the expectations have taken place. A here, a B here, and look at the B also basically bouncing at this 61.8 fib. So the target, minus 272 target at 111.44, minus 61.8 target at 111.16 for the moment. Also, another factor on the hourly chart here, look at this first ABC zigzag here going to the 50, right down to the minus 272 target. All classical corrective patterns, basically. So last 4-hour candle was indeed bearish. I think that for the moment, therefore, a continuation lower is likely. And price could go down to the weekly pivot point and at minus 61.8 target, which is a confluence with this level here, the left shoulder, here a head, and here potentially a right shoulder for a potential inverted head and shoulders pattern. That is why I think that when price finishes this ABC down, that this could be a bouncing spot as well, or maybe not exactly there, but anywhere in this area for a potential reversal. Because if we go back to the very beginning of this video, as I mentioned, basically this could be A, B, C. So from that perspective, this bearish ABC could complete a blue B, and I'm looking for bullish candlestick patterns in the 111, 111.25 zone to confirm a reversal. If there are bullish candlestick patterns in that zone, that could indicate the end of the blue B and the start of wave blue C. So that could be one confirmation, and next could be clear momentum, followed by a break, pullback, and continuation around this 21 EMA that will go like this. That could be a next confirmation of that blue C. And that blue C, I think, could aim for 113. Let's put a fib back from here to here. So it could aim for 113.10, 113.86, 113.50, as well as a level to reckon with. That is the euro dollar. Now, why would the ABC happen? Basically, also here, key level like that, and could go back into basically this resistance zone. Don't forget that overall, the euro dollar remains in a range, so more than ABC zigzag, more than the top of that range, I think I wouldn't ask, I wouldn't expect from this euro dollar, and that could be a bouncing spot back down again. Now, pound dollar is totally different because it is not in a range. It is in a downtrend, and not only that, but it is showing strong bearish momentum. And the most recent fall was actually the strongest fall. Look at the angle, compare it to this, compare it to this. That is very strong impulsiveness within already an established and strong downtrend. So on top of that, how do I know it's impulsive? Because first of all, the candles are very strong. The speed and angle is very steep. There are a lot of candles that didn't hit the 21 EMA. The angle of the 21 EMA is very steep, and the space between the 21 and the 144 EMA is very, very large. Followed by a corrective pattern that is choppy, slow, and basically going sideways and respected the weekly pivot point, top of the bear flag, basically making a bear flag continuation chart pattern. So momentum, pattern, continuation is typical, and that's also very typical for a wave 4. So far, 2 rejection wicks at the weekly pivot point, followed by a pullback and inability for price to break above the 21 EMA, looking like a head and shoulders pattern here, left shoulder, head, right shoulder, followed by a pretty strong bearish candle. I think that this bear flag is about to break. And on an hourly chart, one could consider it maybe already an early break right now, whereas on a 4-hour chart, a breakout still needs to happen, but could appear with this candle, for instance. So that looks like a bearish continuation possible on this pound dollar. Very classical so far. Of course, false breaks are always possible, but so far looking very classical flag and continuation target. Anywhere 120, 120, 50 zone. 120, of course, all-time low, and a previous bottom from a few years ago, I guess, and round level. And 120 just as a round level, very important. So it could stop at 120, 120.25, 120.50, and that could be the target for the moment, I think, in my view. It could go below that perhaps, but maybe not right away. I think more likely is that it fall, make a correction, and maybe fall a little bit further, then use 120 maybe for a bigger correction, for instance. That could be likely. Of course, all of that depends also on the Brexit news. I'm just talking about technicals for the moment, not looking at fundamentals. And Brexit news could, of course, always send it up or down. But for the moment, I think enough momentum here to see follow through on this pound dollar. All right, that's it for now. Thanks for joining FXDD here. Once again, live webinars through these links. And of course, don't forget to subscribe to the YouTube channel of FXDD for more videos. From Nenad and myself, wish you all good trading and see you very soon. Cheers.